traders, Gary Wagner here just before 10 o'clock in Honolulu, 4 o'clock in New York on Monday, 22nd day of June 2015, and this is the daily report for gold and silver. After coming to some sort of potential resolution in Europe between the EU, IMF, and Greece, we do have the belief, the underlying assumption, that there might be some sort of resolution that doesn't involve the exit out of the European Union. That has sent the precious metals market, specifically gold and platinum, tumbling. Silver, in essence, unchanged on the day. We'll touch on that in a second, but first to gold. As you can see, currently trading off about $17 on the day, $1184.20. That's off of a low of 81.60 and the high 1200. So we absolutely have some solid resistance at 1200. And as I said, currently trading off about $17 on the day. Silver, a little bit different in the markets, currently trading up roughly a nickel on the day. And then when we take at the highs and the lows, you can see that in terms of a low, it's been just below $16, $15.98. High 1623. We're actually just off the high. We'll touch on silver in just a little bit. So traders, if you recall from Friday, I was looking at the potential to see higher pricing in the precious metals markets early in the week, and that was really based upon my assumption that they would not resolve the current crisis in a way that satisfied many financial pundits and analysts in the market. I couldn't be more wrong in that there is now talk of some sort of a potential compromise. How are we looking at the market short-term and long-term? I want to start with short-term views. We're looking at a 240-minute chart. This is a Japanese average, not a standard candlestick. And we do have the MACD, moving average convergence divergence, below that. When we take a look at this market and our most short-term Elliott wave count, we were actually looking for the market to run to, in terms of market lows, roughly to about 1180. That's what this system is looking for. When we look at the Japanese average chart, you could see that this last little rally that we had, which is roughly what, at around 1176, takes the market just above 1200. Look at the candle sizes. You can see this is really where the Japanese average charts shine, because when you get a market that's picking up steam, in other words, the trend is strengthening or diminishing, you really see it in body size. Because realize the primary difference between this and a standard candlestick is a standard candlestick has a true open and close. That's where you're getting your rectangle. On this, the open is always fixed from the midpoint of the prior candle. And so thereby it's going to take out a lot of the noise, but also the nuance in the market. When we look at our MACD, we certainly got our cross right down here. We are seeing these averages move apart. And in terms of body size, although this candle is still in play, body size is rather large to the downside. So my sense is that we could in fact find some support in the market, roughly in this area, and that would complete, at least on a short-term basis, this corrective wave 4, because the way our system is looking at it is it has completed a very quick A, our B, our final C, and we are at the bottom ends of our spectrum. So what we want to see is if any kind of support comes in the market. Again, I would look at this short term and realize the market is fundamentally uneasy right now. They're waiting to see whether or not, or how I should say, this whole scenario in Greece unfolds. One day they're talking about contagion and the fact that the bank systems in Europe could break down, and the next day everybody's buddies and everybody's friends and everything's going to work out and they're singing Kumbaya. The bottom line is we don't know how this will unfold, and as events change day by day, we need to be able to utilize the techniques that we've developed and effectively have a trading strategy that is profitable. So from our most short-term perspective, next chart that I do want to look at is a half-day 720-minute. Time permitting, I will convert this back into candlesticks, but we currently have it in Japanese average format. Most noteworthy when I take a look at the markets is with everything that's going on in the markets, when we consider that since we really charted this, call it a middle of March, after we saw the market tumble from about 1300 down to around 1140. The biggest characteristics has been the sideways market. Now, that still remains because really when we look at the range that we've had recently, we've had a range of, call it really 1178 in that area. That's where these series of lows are, right in here. And that has absolutely been defining support. And resistance is only a couple of dollars higher, 1220 being the highs right here. We have not broken out of this pattern for quite some time. You can also see that in the MACD. This is that sideways trading activity. But we genuinely have seen the potential for an uptick here. We see the uptick not only in the MACD, but short term, as I said, the shortest term, 240, we are looking for the market to click back up. We told you where we're forecasting it to go. When we look at interim term, and that's what this chart will tell us, what it does state in terms of our current Elliott wave count is we're in a wave 5, and this is in a bear count primary impulse wave, and the wave 5 would be down, and this is where we would get those 1140 lows. And the way that the half-a-day charts are looking at it, we completed a long 3. This was that corrective wave 4, and we are now in wave 5. Even being in a bullish component or bullish part of that, we are still interim to longer term looking for lower pricing. And traders, the last chart that I do want to look at for gold on today's show is just our daily chart. Standard candlestick format, but we can identify a pretty interesting pattern right here. For those that have been with me for a while, it's probably a really easy read, but it in essence is a 3-river evening star. You don't take this call without confirmation, but in essence, in terms of identification, is after a defined uptrend. Well, we certainly got that. Small uptrend, but an uptrend nonetheless. You get a large green candle, we get that here. You get that pivot candle, that doji, where the open and close are in essence unchanged on the day, and then a large red candle which follows it, and that's your 3-river evening star. Of course, to take that call, you're going to want to see confirmation, but we do see this being a candlestick pattern which is unfolded. So we are going to go into the market flat and wait for some of this dust to settle before issuing any trade recommendation. So traders, silver has been reacting a little bit different than gold. Typically, they're running completely in tandem, but we have seen them really kind of split apart. When we look at our silver chart, really what I'm looking at is, we're sitting at the top of this channel. The basic direction of this market has been lower. You can see that by this channel line in our daily chart. You can also see a clear sell signal with the MACD, but you also get this buy trigger that comes in. But the buy trigger that's coming in right here as we see this cross is happening as the market trades to the upper end of the range. I really wouldn't feel comfortable on the long side in silver unless we had an effective close really above that price point, because if we get that along with the MACD crossing on a technical basis, it could be telling us that we are going to see higher pricing. However, the big caveat is, if you look at the candle size recently and say compare that to almost any other point in which you have much larger candle size, even if the market's consolidating, look at how tight the ranges are between the open and close. You're almost getting these series of dojis and almost need to look at a weekly chart to make any kind of sense out of that. And when we do look at our weekly chart, we have the potential for a bottom, and it's basically a candlestick type that's called an inverted hammer. And traders, I've gone ahead and pulled up our weekly chart so I can illustrate what I'm looking at and what I'm talking about. The inverted hammer, and it's not a pure candle because of the length of the wick down here and the length of the tail, but in essence from the umbrella group, of candles, you've got either an inverted hammer, a hangman, or a shooting star. Those are the 4 type of patterns or candle patterns that you can get, this being the inverted hammer. So we'll have to see if we find support in this area, but as I said, on a weekly basis, we could be looking at potentially higher pricing. But again, even with this market moving up, sitting just above $16, $16.50 is really where I see some real resistance coming into the market. This has been Gary Wagner wishing us always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.